Good morning. We're starting off with a new slide. This is the number of successful offers accepted for the four counties being San Mateo County, Santa Clara County, Alameda County, and Contra Costa County for single-family homes, condos, and townhouses. The three lines that go all the way across the graph are the minimum, the median, and the maximum of the 10-year number of offers that accepted. The 10 years I'm using for this graph are 2010 through 2019, which were all 10 good years. The other thing is this basically starts March the 7th, and that gets into leap year and having one extra day in the year. And I will probably alter the graph so it starts on January 1st, but there will be a discontinuity at the end of February where I'll never count February 28th. And when February 29th happens, I won't count that, but I'll actually use the data from it, and then I'll be off for one day when they're on the 28th, and then I'll be off 2 days on leap years. So for now, I'm just doing it simply starting on the 7th of March and going forward. So the blue line is the current year, 2022. And so you can see that in the beginning of March, we had above the median number of offers being accepted, but below the maximum number. The maximum number was the best year we would have ever had. And you can see it was in between the two until basically the beginning of April. And at the beginning of April, we dipped down, but only for a little bit, for basically maybe a week or 2 weeks. Then we came back up because this is every day. So there's a data point for every single day. It's the 7-day moving average, moving sum. So it's a 7-day total, but it's for every single day. But then you went back up to the beginning. And then right here, right around April the 16th, we dipped down. Was that a change in the marketplace? I don't think so. I think it was Easter. Remember, every holiday negatively impacts real estate except for Mother's Day and Valentine's Day, which have a slight positive impact. So I think what we're seeing here is the Easter, the tax filing season, which happens every year. So that really wouldn't impact the median. So I think this was the Easter bump. But then we never really recovered, and we stayed right sort of along the minimum all the way up here until about May the 9th. And roughly on May the 9th, we dipped below the minimum. So ever since May the 9th, we've been having fewer offers accepted than the minimum number for that time period, which is 2010 through 2019. So you can see that we're still below, we're getting close to the minimum number. But again, those were good years. So this is a data slide that I'm thinking about doing for the number of offers, the number of inventory available, and also for DUI, but it's still a work in progress. I want to get this one done first because I think it's the buyers going away that is creating the current shift in the marketplace. Moving on to the next slide, which is the normal overbidding. This is the sale price to list price distribution. This is how much pressure the buyers are sensing. The dotted line, the red dotted line, is the best week we've ever had, which was March 26th of 2022. So not that long ago. And then what we have are the dotted lines, which are the oldest 6 lines. The dashed lines are the next oldest 8 lines, and the solid lines are the most recent lines. So what we were doing is earlier in the year, we were climbing up along the blue line. We got to the March 26th, we turned around and we started coming down. We hovered for quite a while. Basically, the month of March, the month of April was basically real close to the peak. This dashed green line was sort of the first week that we came down, and that was May 14th. So May 14th was the first time we came down. That's still a very good week because you're out here and something like 87% of the sellers were getting more than their asking price. But since then, we've been climbing down. Last week and the week before that were basically identical. This week's gone down again a little bit more. Keep in mind, here's your 50 percentile. So right now, it's something like 51% of the sellers are getting more than their asking price. So even though there's clear indications the market shifted, still half your sellers are getting more than what they're asking for their properties, which is still a strong marketplace. You start getting into a balanced marketplace when it leaves the axis down here somewhere around 33%. So we have a ways to go, but the buyers are clearly feeling less pressure. As the line moves down and to the left, there's less pressure on the buyer to overbid. This is the same data, so I won't spend much time, just the last 12 weeks in groups of 3. You can see now the dashed lines are at the top. Basically, April 14th was the first first week that it came down. So these lines here are pretty close to the cluster at the top. And then we've basically marched down. And you can see there's 2 weeks on top of each other. Those 2 weeks are close. So it's not a step down every week, but it's in that direction. Now we're looking at the available inventory, which is the blue line. And you can see it started climbing back here after week 15. And I believe that's week 16 was the first climb. And I believe that's April 9th. So starting in April, your inventory started growing. What really triggered it though was right here. The red line is the number of offers accepted. You were somewhere around 115%. In week 15, you were at basically 15% above the level you would expected. This graph uses 2015 through 2019 for a 5-year median of expectations, and that's the yellow line. So if you were exactly the 5-year median, you'd be right on the yellow line. You can see you're 15% above, and then boom, we dropped down, and now we've been floating somewhere around 20% below the 5-year median. It doesn't sound like a huge shift from 15% above to 20% below, but that's a shift of 35%. And if you're at 115%, that's basically a third of your buyers just disappearing essentially in a 1-week period of time. That's pretty unusual for that kind of behavior to happen. Now, it hasn't gone more that direction, and the number of new listings coming on the market's been right about where you'd expect it to be with some fluctuation. This fluctuation here, the big fluctuation, is because Memorial Day was as late as it could be this year, and therefore normally this week 20, I guess it would be, is going down, and this year it didn't go down because Memorial Day was late enough that it all waited till week 21, which is why week 21 is lower. But you start averaging these out, and again, you're essentially right at the yellow line. And, if you come back to 2021, you might say the gray line, the number of new listings was slightly above the yellow line, and I would agree. And even early in 22, but the demand, the red line, was above where the number of new listings was coming on the market. Now it's reversed. We have less demand, and now the gray line is above the red line, which is causing your inventory to gradually climb. Here is looking at DUI. This is good news. We reversed and we improved. This is because the week after the holiday, you have a flood of new listings coming on the marketplace, and then they get reported the week after that. So now we're reporting the extra sales. If you go from here down to here, you're clearly less than my 5-day increase per week, which is sort of my threshold of being concerned on how rapidly the market's changed. I've also downgraded it a little bit because at this time of the year, DUI is normally climbing. So we're climbing a little less than 5 days per week at a time when days of unsold inventory is normally climbing. So the shift is not as dramatic, but the buyers are really feeling it because they don't have the pressure. A third of the buyers went away. The competition isn't there like it used to be. This is a graph that simply shows the 4 counties, number of offers accepted, and it's sort of telling, and I did this a long time ago, I don't know if you remember it, was for the Mercury News. In the month of February, they were talking about how the buyers disappeared back in February, and we were having the second best year we ever did out of 10 years. And in this case, and I'm sorry my baselines move around so much, was 2013 through 2020. So I'm using the 10 most recent years, including the current year, and we were the second best. Here you can see on April the 1st, we were the top. We outperformed 2021, which was doing outrageously well because of the pandemic. Noticing the dip, and I did not look at this. My guess is Easter was probably sometime in that time frame. So you had a dip down for Easter, where in 2022, I think it was probably April the 17th. So you see the dip down for Easter. We were the 5th best week we've ever had out of the last 10. And then we basically never recovered. 7th, 7th, 9th, 9th. And basically since June, we're the worst month we've ever had. Now we're close because you're 847 versus 855. But a little disclosure, the 855 is a firm number. Those escrows are all closed. The 847 has an awful lot of pending transactions, and some percentage of this will disappear. Some percentage of the sales will get reported late. For anyone that goes back and looks, I think the number for last week was 632, and I upgraded to 685 because that's the current number, still the 10th lowest. And at this point, this 685 will probably only go down. It would be pretty unusual for someone to report a sale that occurred before July 8th at this point, but those pending transactions are still going to fall apart to some degree. This is starting to show things graphically, so it becomes easier to look at. The purple blue line is the current data, and I'm looking at the offers accepted for the past 5 weeks for the 4 counties, which are again San Mateo County, Santa Clara County, Alameda County, and Contra Costa, single family homes and condos and townhouses. I'm just plotting that number, and you can see the 10-year median, which I actually don't know. I think it's going to be 2010 through 2019. I didn't have to check that and label my graph. This is where you'd expect it to be. So you can see the current data, the 2022 data, was above your expectations until basically here, and it crossed over, and then it came down, and it's fairly dramatically lower now. You'd expect to be selling 5,500 units in that area for 5 weeks. So basically 1,100 units a week. And now you're down here selling 4,000 or about 100. So you're 300 units short on 1,100. That's a little greater than 25% of your volume that you would expect is not happening. And then I compared to other bad years, just to give us reference, 2001, which was the dot-com bubble here. You can see the little impact in 9/11. You had the mortgage meltdown in 2007, which is back here in January, and it took a while for the impact to really hit. So it looks like the impact came in around the beginning of March. And then again, there was a secondary impact. And I don't know what happened in July of that year. That's too far back for me to really remember. And then I think and then COVID. I put COVID in here so you could see the dramatic impact of COVID. Now we get a little bit even more, and I don't like processing data, because anytime you process data, you can be called manipulating the data. My processing of the data is limited as much as possible, but it's trying to make it more visually obvious what's happening. Here I have the same number of data, but I subtracted it from the 10-year median expectation. So if you're having a median year, you'd be right on the horizontal line. So a median year would be right on the horizontal line on the axis, which is not at the bottom of the graph, but in the middle, because that's 0. You subtract the median number from the median number and you get 0. So you can see that we were having more than the number of offers expected up until somewhere right around April the 26th. On April the 26th, we went below. And what's sort of interesting is this dip here is very characteristic of the data, and I'm not sure why. You can see it here on the green line. You can see it a little bit here on the brown line. COVID is a little bit different, so you're not really seeing it, it was an unusual event, but I'd almost argue that it's a little bit here. The event that happened is right here, in my opinion, which is actually almost a month earlier than I thought it was. Until I did this graph, I was saying that the event was May 2nd. It appears that the event was really May the 9th, and this was the bleed back down. So I'm now looking for something that happened around April the 9th that caused the market to really shift. But let's talk about some encouraging news. Notice the leveling off down here. So the market's not continuing on this downward trend, which just a few weeks ago had no indication that it was about to stop. But if you look at all the trends, that's what's happening every year. It's been going down and then abruptly stops. And some years it turns around, some years it stops and sort of plateaus. Here we've stopped and we've plateaued. And what's really interesting is the duration of these downslopes for the most of them is about the same. 2001 was different. You had the .com, which is close, but a little bit on the short side. And 9/11 was really short, but that was sort of like a roller coaster. I don't know how many of you remember that, but we had the impact. And then right afterwards, people wanted to nest. And this was the nesting instinct where people went out and were buying houses at a faster than expected rate. Here's your purple line, the current year. And, the good news is for the last, since basically the end of June, we've plateaued. And, if someone wants to be real optimistic, they could say this last week's been an upturn. I would still call that pretty flat because there's a lot of fluctuation. Keep in mind, this is 5 weeks worth of data. So you're going back in time, but that gives you more stable data points. Here's the same thing. I've added one line, added the stock market, because a lot of people here in Silicon Valley believe that real estate is tied closely to the stock market. And I don't follow the stock market that closely, but I believe that the stock market crash happened in August of 2008. So here where the stock market crash happened, there was no impact essentially at all on the real estate market. And I see that time in and time again that yes, it has an impact, but it doesn't show up in the data. And so when you have an impact on the data, it's something more significant than the stock market. Here is just Santa Clara County and San Mateo County, but both single family homes, condos, and townhouses. It's 5 weeks data. The blue line is the number of new listings and the orange line is the number of new offers. Anytime the blue line is above the orange line, you have a slow marketplace. You can see you had it back here in 2015, but then basically from 2016, they were basically basically on top of each other. And anytime you're selling as many new homes that come on the marketplace, you have a pretty aggressive market. And you can see it actually changed earlier in this year, but it's a pretty steep climb. So somewhere right about here is where we started really having a significant delta difference. So again, the number of new listings coming on the market, the blue line, is above the number of new offers accepted, the orange line. This is just looking at DUI. This year, for whatever reason, is sort of unusual. See how straight up these lines are? They're, every upshot is straight. This year, and I have no clue why, it's going straight up, and then it's got almost a plateau for a week, straight up, a plateau for a week, straight up, a plateau for a week, straight up, and a plateau for a week, straight up. I'd almost expect a plateau for next week. I have no idea why, but that's what the data is showing. Here is the number of sold DOM, days on market. And I put this on there. I think it's a very bad data point. I put it on because it's one the media focuses on and a lot of agents focus on. Here you've gone from something like a median days on the marketplace of 7 to an 11. Now that does not sound like much of a change, going from 7 days to 11 days for half the homes selling. Meanwhile, DUI went from something like 18 days of unsold inventory to 60. That's why I don't use this data. It doesn't move very much. Even the average, which moves a little bit more, went from something like 11 days up to maybe 17 days. You've gone up by 50%, but your days of unsold inventory, which is the ratio between the current inventory and the rate of sales, has gone up by a factor of what, 3.5? I put it on there just to sort of dismiss it as a valid data point. Put this in mostly just because people like to see it. It's the median sold price here in the orange. But what I also add that most people don't follow is the 10 percentile. This is the cheapest and this is the most expensive. And it's just to give you some idea. You can see the median's gone up and come down. The low end has come up and gone down a little bit. And even the high end, even though there's more fluctuation, you could say it. But I'll caution you, there's no product that combines single family homes, condos, and townhouses. That's why I normally do the prices separately. I do it to combine here just to give an overview. We won't spend much time on this slide. I just put it up there in case people want to know the breakdown, but you can see the number of new listings. And Santa Clara had exactly the same number of new listings this week as it did last week. You can see there's been a fluctuation. San Mateo County had 27% more. Alameda County had 9% less. So you can see there's a lot of fluctuation in condos. Single family in Santa Clara County was 12% less. Contra Costa County was 28% more. So it's all over the place when you look at 1 week's worth of data. If you come down to offers accepted, this is 1 week up here. Down here, I'll spend a little more time, is the 5-week data. So now what you can do is you can start looking at DUI. So this week, based on 5 weeks, days of unsold inventory in Santa Clara County is 60.5 days, 55 days in Alameda County, it's 57 days in Contra Costa, 54 days in San Mateo. When you consider roughly 40 to 80 to be a balanced marketplace, we're in a balanced marketplace. We're still favoring the sellers a little bit. You can see condos are still sort of in the same magnitude, but Alameda County and San Mateo County are at the higher end at 70 and 75 days. Contra Costa is doing the best at 44 for condos, and Santa Clara County is at 57. Some people may just want to go out to the total for the 4 counties to get a global picture, and that's fine. And then down here, this is closings for the past week on what's happened. So now you can see that we're still 70%, 69% of the sellers are getting more than their asking price. The median overbid is 3%. The average overbid is almost 7%. And this is the price range. And again, that's single family in the 4 counties. And then you have condos over here on the 4 counties. I'll pause to see if anyone's got any questions at this point, and then I'll go forward into additional details. Does anyone have a question they want to ask? Not seeing anyone unmute themselves, I will continue going forward. And at this point, you can ask a question at any time during the presentation. Okay, so now we're looking at the yellow line is the 5-year median. Again, 15 through 19 is the 5-year median, and the blue line is the current data. So you can see starting here, going back week 15, you had limited inventory. Starting week 16, you started climbing. By week 20, you had above the median number, right at the median number. Week 23, you were back right at the median, but since week 23, we've had more inventory available than you would expect. we can see last year, so basically just a year ago in 1 week, you had quite a bit less. You only had like 1,800, maybe 1,850, maybe even 1,900 inventory. And now you're at 2,500. So that's basically a third more of the inventory. That's the supply side of the equation. The demand side of the equation, the new listing side. This is my data that tracks almost identical. The blue line, for the most part, is right on top of the yellow line with as much fluctuation as there is. And what that tells me is sellers are always putting their house on the market at the same rate on a global picture. When the market changed, it's buyer behavior that changes most often in the Bay Area, not seller behavior. When we've gone from a very strong marketplace to a weaker marketplace, but still strong, a weaker marketplace, it's the buyer behavior, the buyers pulling out of the marketplace that have caused that. And here you start seeing it, the number of new offers. You can see the blue line was above where you'd expect it to be. Right up here at week 15, they were even. Since week 15, the offers has been below what you would expect it to be. Here's your DUI. I will point out, as far as I know, this is accurate data. I haven't explored it much, but the tan brown line back here, San Mateo County single family homes, it actually was going the opposite direction. Santa Clara County single family and Santa Clara County condos were both going up. San Mateo County single family were going down. It has reversed direction. It's turning around and coming back up. What caused the one county to act differently? I have no idea. The blue line is the 5-day per week, and you can see the distance here is greater than here, so the slope of the data lines is not as steep. So again, it's something that's close to my level of concern, not quite. This is the time of the year when DUI is normally climbing. I dismiss it a little bit more, but again, it's something to pay attention to. Here's DUI, days of unsold inventory out geographically. We have our first blue on here at 91 days, and anything over 77 starts going blue in color. The expensive areas in San Mateo County are our first blue areas. Our really only red areas left is the Cupertino, Sunnyvale area in Santa Clara County. The coast out here has a faint shade of pink to it that if you look at 38 days, but just go back a few weeks and that was a whole lot redder. In fact, here is a table presentation of going back here on May the 7th. Basically everything was not bright red, but it was very much on the red pink side. And you can see it got paler. And then, there's some fluctuation, like Cupertino Sunnyvale actually got paler right back here, right about the beginning of June. And it's improved a little bit. Same thing happened with the coast. It went all the way to neutral, very pale back here. And now it's sort of a deep red, but now you're back to pink. So there's a fair amount of fluctuation from week to week to week. Here's the frequency of overbidding. And I maintain the frequency of overbidding is more stable than the magnitude, because the buyers are still willing to pay more than the asking price. They're conditioned to that. But instead of paying 117% above asking price, they're now paying 3% above the asking price. The magnitude has dropped a lot more than the frequency, but this is looking at the frequency. Last year on the right side of the vertical purple line, 2022 on the left side, and you can see we're in week 27 here. So right now, something like 56%, 55% of the sellers in Santa Clara County, San Mateo County, both types of property are getting more than their asking price. Here's the breakdown between the three. You can see that they're right on top of one another. They're rolling down. It looks like a pretty steep drop, but you were at 90% and now you're down at 65. That's actually interesting. What I'm just noticing is your single family homes in Santa Clara. This is based on a 5-week data. What I was noticing is here, you're at 55. This is based on 1 week. 55 is lower than any reasonable estimate of 62, 65, and 70. So it's like, how can the combined number be lower? It's lower because it's based on 1 week. And when you're slowing down, this is going back into better territory because it's going back 5 weeks. So it has 4 weeks from the history. So that's why the numbers aren't the same. And that's why I try to label all my tables and graphs. Here's the frequency of overbidding geographically for you. You can see the hotspot real close is sort of a little bit of surprise to me. It's single family homes up in Daly City. On my maps, I only plot single families. I don't plot condos and townhouses. You can see the expensive areas in San Mateo County are not doing so well. They're 51%, 52%. With the coast is overbidding, but it's also only at 53%. But you can see most of Santa Clara County has some degree of red, which means it's above 50%. Here's the magnitude of overbidding, and this is what I'm talking about. You were at 116% of the asking price, and now you're at 102%. You can see that's come down fairly significant because the buyers just aren't feeling the pressure. Most of last year, we were bidding about 8% up. Now it's 2. Buyers are feeling way less pressure than they were last year at this time of the year. This is the magnitude graphically. Again, you can see the trend is down. This is going to be the 5-week, and that's why the number again is higher. You can see all these numbers are above, call it 104, and yet the 1-week number was 102 or 103. Here's the map showing the different percentage of magnitude of overbidding. Here I say anything above 101.5 is going to be some shade of pink. So you can see that most of these areas have a shade of pink to them. Here is the 3 counties median price only. The previous slide showed the 10 percentile and median and the 90. Here I'm just showing the median for the different products. So San Mateo County, you can see here you peaked out at somewhere around maybe 2.4. Now you're down to 2.1. So that's roughly a 300,000, a little bit more than 10% drop. And these numbers are just off the top of my head reading the graph. So, you can use your own numbers. This was actually, I believe this was 1967, the peak. I kept meaning to look at it, and I'm pretty sure that's what it was. And that looks about right. The number now is somewhere probably around 1,700. So you've lost somewhere around 300 on almost a basis of 200. So that's almost 15%. Condos tend to be a little bit more stable. You were somewhere around 1.50, and now you're probably at 975. So you've lost 75,000 on 950, which on 1,050,000, which is less than 10%. So the more stability is showing up there. Here is the price. This has nothing to do with the heat of the market. This is simply price. If it's basically white in color like Redwood City, that's the median price. If you're redder, you're above that price. If you're blue, you're below. The color is assigned based on the median. Then the number to the left is the 10 percentile, and the number to the right is the 90 percentile. If you go back and look at my archives, there was a week not too long ago where I made the comment that we almost got rid of the ability to buy a home under $1 million, a single family home under $1 million. Now you're at 900,000. So that's an indication that even the low end of the marketplace has dropped 10 percentile in price. And remember, sell price lags behind because you have the 35-day period of escrow, 30-day period of escrow, 28-day, whatever it is all over the place. Here is your peak pricing in highlighting in yellow. If there is no highlighting in yellow like Los Altos and Palo Alto, that means their high of 39% was sometime in the past, but most of them are out here. It's sort of surprising that San Mateo County Coast had a 43%. Now, granted, it was only 1 week. You were 29 the week before and 28 the week after. There is a possibility that's a bad data point. I have not gone back and looked at it. I will, since it's a record and it's up so much and was a one-time impact. Here is your different geographical areas, single family on top, followed by condos and townhouses on the bottom. You can see the DUI. This is sort of the current market conditions, white being balanced, blue being sort of favoring the buyer, red favoring the seller. The frequency of overbidding requires sale price, so escrow closes. So these are a lagging indicator. Frequency is going to be the last thing, in my opinion, to change colors if it does. Magnitude is going to be the second. And then sold price has nothing to do with the market conditions, but it's simply telling you the price. On condos, the highest price is set to white, and then I go down from there. There is no color connection between single families up here and condos and townhouses below. Here's a breakdown of the different components, your different types of properties, your active, you look at inventory, so you can see the blue is sort of a cool marketplace. We have above the number of listings you expect. Santa Clara is balanced at 112% because I go up to 115 balanced. Everybody is balanced marketplace on DUI because it's somewhere between 40 and 80. Frequency of overbidding is still a seller's marketplace because they're all above 50%. Magnitude, it's starting to get close in at least one area here. Bay City's condo 103%, only has to drop another 1.5% before I do it. Say that it's balanced. And then your appreciation, it is noteworthy in San Mateo County, and this probably should actually be blue. The peak price in 2021 was 25% appreciation over the entire calendar year of 2020. 2020. And now that appreciation is only 20%. Condos and townhouses in Santa Clara County is balanced because it was 18 and now it's 21, but they're all down fairly dramatically from the peak. And it is very noteworthy. And I believe this is accurate data. The Bay counties in San Mateo County is down 29% from 2020. So the condos and townhouses that are selling in the Bay cities in San Mateo County is now roughly 30% below what they were selling in 2020. I believe, and that's why these numbers are crossed out over on the left, there was a huge buildup of high density condos and townhouses in Redwood City area since 2005, 2015. Those are now hitting the resale market. So the value of what's selling is lower, not any one property value. Here's comparing sort of apples and apples. I'm comparing current data on the left-hand side to the most recent data that I had, which was the 6th of July. So we're looking a little bit in the rearview mirror, but you come down here and you can see sales only 738, and you can see that's the lowest number anywhere on here in 20 years. That might sound alarming, but if you pay attention to these numbers have been gradually going down, which is why I only used from 2010 on. It wouldn't be fair to compare the volume now. And I believe that's because of Prop 13 keeping people locked in. So you can pick out whatever criteria you want. Probably one of the better ones to use is days of unsold inventory, which is right here in the purple. We're now at 61 days of unsold inventory, and that you can go back and compare, and you can see we're lower than we've ever been since 2012. But if you go back to 2011, you were at 46. So that's 58, so that's getting close. But then all these, they're all higher. So all you have to do is go back to 2010, 9, 8, 7, and DUI was higher, but we had a slower marketplace. And with that, we have the URLs. Here's how you get to the YouTube archives. You add 2022 to the root URL and you get to the live presentation. You add in the letter H and the 8-digit year, month, day code, and you get the handout, which I got up at 8:30 today, which is earlier than normal, and any specific episode. With that, I'll take any questions people have, and if I don't have any questions, we will do a wrap. Go ahead.
Yes, Richard, thank you for this presentation. Any thoughts on clients are talking about interest rates continuing to be raised by the feds and are concerned that the market will continue softening through the year? I understand you don't do crystal balls, but if you did have a crystal ball, what are your thoughts on that? Because some of your graphs seems to show some stabilization in the balance market here.
There is definitely some stabilization going on. And what I find very interesting on that is the length of the downturn, the duration of the downturn is typical of the other past downturns. So is there some fundamental reason where we've already done the correction? I don't believe interest rates have nearly the impact that people think it did. I heard a story, and I think it was attributed to Redfin, but I'm not sure. It was on the media. I only heard it once, where someone was saying that 70% of the transactions that closed in the Bay Area in the month of June were all cash. I cannot believe that for a minute. That's just way out of line. And I'm assuming they were using public records data or something, because my buyers almost always get some sort of a loan. I don't think people can predict the market. I think there's so many factors. When interest rates first went up, I did that calculation with a 33% increase in interest rate. It only impacted purchasing power by 17%. Buyers will buy a less expensive home, but I'm not sure they won't buy. And, I have not been able to tie the downturns, which, was basically, I'm now saying somewhere around April 2nd, April 9th, instead of May 2nd, May 9th. I can't tie that to interest rates. So something spooked the buyers that isn't associated with interest rates. I know everybody hangs it on interest rates. I would much rather hang it on with the fear of layoffs. If the fear of layoffs comes in, that has a much greater impact than interest rates, in my opinion.
Thank you.
Anyone else got a question? Well, I'll end the meeting then. Thanks for joining me. Take care.
Thanks, Richard. Have a great day.
Yep. Thank you.